anyone
Okay.
shows up, they show up. Kind of a different because we had a short trading week because of the Labor Day weekend. So it always kind of
Yeah.
puts, um, makes it a different kind of week for sure. When you start out on Tuesday as opposed to Monday, gives you an extra
Hmm.
day for news and other things. And I was just looking back just on this short week. You know, there's really a lot more concern of further interest rate hikes. Because we've had all this economic data points suggesting sustained inflationary pressures and tightness in the labor markets. For sure, we've had initial jobless claims came in below expected. They were expected at 216,000. They came in at they were expected 230,000. They came in at 216,000. So that basically is a cooling of the labor market. It's key for the Federal Reserves, and they're not seeing that. The labor market's still pretty robust. Um, the prospect of more hikes or elevated rates for longer, has really been kind of a concern, this week for the markets. Everything is so focused on uh, basically, what the Fed's going to do. Are they going to raise rates? Are they going to pause? Are they going to lower rates? And again, like I said last week, it really doesn't matter to me because I don't think we've actually seen, the lagging effects of the rates that they've already done. They're still working their way through the system. So we'll see, and then next week, we have the latest, circus of the CPI and the PPI. And when you think about it, I don't know, what your gas prices are where you are, but as I've said for the last several weeks, mine go up, exponentially. It seems like every week as I go down and fill up, and that's got to
Hmm.
figure into. I mean, it won't be core, but that's got to figure into headline, inflation figures coming forward. So and I don't know that rents and lodging's going down. So I mean, my anticipation is we're going to see, uh, just based on how I live, a bump in inflation, in these
Yeah.
numbers. But we'll see.
I
Uh,
think what's interesting is you're looking at the cost to buy a home today, and yet a big chunk of Americans still want to buy a home, but rent is probably more affordable at this point and easier to rent than it is to go through the process of getting a mortgage. And that's where I took a look at this and go, well, rent prices aren't going to go down, but mortgage or new mortgage applications and new home purchases, I gotta believe, are going to start to tailor off, and it won't be like gradual; it'll be a cliff. And that's what I think I'm sort of waiting for is when did we just step off a cliff with some of this data? It never gradually goes down, right? So,
yeah. And
yeah,
it's always lagging the data. And again, we've talked about it. The market is not the economy, and the economy is not the market. And they're really, from all my life, are not really connected. We just kind of wander from report to report to, and it's almost like waiting for the next week's game, to see how your team does. Uh,
yeah.
this week's game is good, but what's coming up next week, and it's frustrating, for a lot of investors because we just got off of 12 years of nice growth because of uh, zero interest rates, and now it's a different world that we're living in. For a lot of people, especially younger traders and younger investors, who aren't used to seeing this kind of volatility that we're seeing, and you know, just like day to day, waiting for the next report and the next shoe to drop.
Hmm.
Then we got treasury yields, are all over the place, and they weigh in on the growth stocks because the cost of borrowing goes up, and you're going to have a lot of companies, who eventually are going to have to refinance, and maybe people with houses and business loans, and they're not going to have the 2%, financing anymore. It's going to be a lot higher, and some of these
Hmm.
companies aren't going to have the cash or the wherewithal to do it because they don't have any revenue, and they call them zombie companies. But
Yeah.
we'll see how that hits too, and again, that's coming forward at some point, and they're going to join the party, and we'll see how that affects markets. And then, of course, you got China, and China just had their service sector expanded the lowest rate in 8 months, and then they dropped the bomb on Apple and said, well, we're not going to use your phones anymore in government. And you see what happened to Apple. I think they're up a little bit today.
Mm-hmm.
Again, oil prices. I saw where U.S. airlines are warning of higher prices for tickets in Q3 because of oil prices. So again, that'll add to the inflationary look of things. And travel has been kind of a bright spot. People have been traveling, and although I noticed, and you've told me you're down in Florida, you've noticed this year it's not as intense as far as the travel as you've seen in the past.
Yeah, I actually was speaking to a property management guy yesterday, and I asked him how his season was. He was like, it was good, but it hasn't been as good as the last 2 years. He says what we're battling or we're up against is overseas travel. So like it's cheaper to go to like Cancun versus to go here in this area. And then flights are a little bit more reasonable. And so you put that whole package for a family of four, and it's just cheaper to go to Mexico, or it's cheaper to go to Europe, or what have you. So, yeah, I think, that could be why domestically it's affecting that element.
Well, I think you factor in that, over 60% of people live paycheck to paycheck. And then you look at, the credit rates are, people are borrowed out to the wazoo now, so they're tapped out. So, we might see a slowing based on that. Also, at some point in the future, at some point, you're going to max out your credit card. You're going to start paying it back, unless you're the U.S. government, I guess. Then we don't have to do that.
Right? Yeah. As long as the printing press goes burr, you're all good, right?
Yeah. So, and that's the other thing is, you got bonds out there, and the Treasury Department's trying to refill their coffers. And so if you look at Treasury bonds, I mean, they're just absolutely going up every week. And it's for a fixed income investor, it's awesome because I throw a lot in there. And I know, again, we talked about it before. I think Warren Buffett buys 10 billion worth of Treasury bonds a week. Okay. And every week, and he gets a better rate than you and I get. I can tell you that. But still, let's just take a look at, can I share my screen? Is that Drew or is that you?
Yep, Mark, you can do it now.
Okay, thanks. Let's just look at Treasury. See what Treasuries are doing right now. Can you guys see that?
Yeah.
So here we got the 1 month at 5.39, the 3 month at almost 5.5, the 6 month over 5.5, the 1 year 5.4, the 2 year 5.9, 10 year 4.2, and even the 30 year is at 4.3. And I was talking to some my friends in the investment field, and they're talking about buying 30-year Treasury bonds right now because they think at this rate, when the interest rate goes down, that these bonds are going to be worth a lot more money for them. It's just like buying the TLT, only you're buying the bond directly, and that this rate here, even though it's 4.34% on a 30-year Treasury, it's safe money. And they're looking at the point in the future where the interest rates go down, and then they get on the secondary market and they sell these Treasuries at a higher point than they bought them and make a lot more money. So that's something that they're thinking about doing. When you talk about the inverted yield curve, you see, for 4.34%, you can get a 30-year, Treasury bond, or you can get a 1 month Treasury bill for 5.4%. So that's why it's inverted, and that's why it's messed up, because there's more risk on the long end, but you're getting less pay than you are on the short end, where you're getting more yield. So it's been this way for a while. It'll be interesting to see how it goes. But if you have cash sitting on the sidelines, I have quite a bit, and I do 1 to 2 year or 1 to 2 month Treasury bills, and at this rate right here with the tax advantage that you get, it's a great place to park some money while we're waiting for things to to kind of work out here.
I would be really curious to know, like, the Citadels, the major hedge funds of the world who trade, anything from derivatives to bonds to that kind of thing, what their holdings in U.S. Treasuries look like right now. Because a lot in those cases, you can take those treasuries because there's not a lot of volatility to them. You can leverage those things up and produce an incredible return. But also, if we do see a move lower in the treasury yields, the amount of capital appreciation, like we're talking about on the secondary market, is astronomical, especially if we leverage it up 10, 20, 30 to 1, I would be curious to see, I think isn't it the 13F they release every quarter? I'd be curious to see what some of these big hedge funds do, what they're buying right now, because they think at that kind of distance,
I don't watch them that much other than Berkshire, because I own Berkshire Hathaway. I've owned them for a long time, and I know that he's got so much cash piled up now, and in Treasury's making whatever he's making. I'm sure it's well over what you and I make. And when you're talking billions of dollars, he's just sitting there every month cashing in and redoing it every week. He's just waiting for something to happen. He likes things on sale, for sure.
Yeah.
The other things we got the CPI and the PPI, and then we've got the Fed has a meeting. Of course, everyone's going to be waiting for what are they going to do, and the whole gas and the world is talking about, well, there's not going to be a rate hike in September, but there's probably going to be one in November. So, we start the party all over again, worried about November, which is kind of, it just seems like the market's just waiting for again, different things to happen instead of actually looking at the fundamentals and, what's actually happening. Then the other thing we got, of course, at the end of the month, September 30th, I think the government runs out of money. And so it'll be interesting to see what happens, in the circus in Washington, D.C. and, what they're going to do. When we talk about, the government shutting down, from my experience and from what I see, the government really doesn't shut down. They just shut down non-essential areas of the government, which to me has always been interesting. Well, if thhy non-essential, why do we have them? But we do. Because the government runs and the government goes on, and we'll get into the politics of shutting down national parks and this and that, and you can't go see an art gallery or whatever, and it's the same thing, and on both sides the people just need to get together. And we do have a debt problem in this country. We can't continue to kick this can down the road. I don't care who you are or what side of the political spectrum you're on. We're all going to have to pay this off at some point. And at some point, we're going to get past the point of return, and it's going to be an issue. But, that's far from the discussion that we're in here on swing trading. But when you look at market conditions, that weighs heavily on me when I look at market conditions and wonder, how are we going to pay this debt off? And especially with interest rates. And again, I'm not an expert on how the government pays this back, but I know that I think I saw a story a week or two ago that we went from under 10% of our budgets paying for the interest to almost 20% now, just because of the interest rate hikes. And we can't sustain that very long either, if that is indeed the case. So that's kind of what I've seen in the market conditions. Do you see anything else, anyone else that around your economies or whatever you're seeing that may jive with the reports we're getting? Anyone? See, we got Jason.
I think I posted a video under the Premier Plus under Trends Charts, and it's I took a segment from interview with it was on headline.com. It was with their partnership with Tier 1 Alpha, and they analyzed option activity. And it's very interesting how they pointed out how markets have been moving around because of how option activity has been being played out, and especially the influence of 0 days expiration. And right now we're pointing at like 4,500 on the S&P as the top side, and then 4,450 on the downside. And so once you see market, the S&P get to those levels, you all of a sudden start to see a flip in volatility. And it has now become a directional trend market versus, fundamental or macro market. And, it's like right up into the Jackson Hole event. The markets were very hedged, and that hedging pushes markets to a higher level because of the process of hedging. And it's like, as they pointed out, it's like this has not become it's no longer a fundamental thing. It's a event to event. So like on the 13th, we have CPI number, we have future Fed movements, this, that, and the other. I think right now, until something fundamentally really true breaks, or the rate of change is so drastic, we're just going to see this market go bounce back and forth, side to side. And I think that's where swing trading really comes into play in this place, is moving with those trends.
Yeah, it's more than just looking at the technicals, because again, market conditions, we always talk about, I like to get out before a particular company, if we're actually in the position before earnings, because I know that's a market condition coming. The only thing I don't know is how it's going to affect the stock. So I would rather be out with the profit on the top side than risk earnings coming out and seeing it dump down 12% in one day, because that kills you as a swing trader. Now you can wait and get back in at that point, wondering if it's going to go back up. But a lot of times you'll see the pattern is, if it doesn't go up, it drops down whatever percent, and then it goes sideways for a while, trying to determine where to go. So it's better to get out, take your profits. But that's a market condition. Now it just seems like everything is a market condition. That wasn't too long ago, no one cared about the beige book. No one cared about the CPI. No one even knew what a PPI was. No one cared about the unemployment numbers or the jobless rates or the jolts or any of that. None of that stuff ever mattered. And now we live, on the edge of our seat, waiting for reports that people don't even know what's in them, but from time to time. And then month to month, they come back and they revise them, so that they're not even right the first time. And we're making decisions based on these market conditions. So it makes it more difficult, because again, in swing trading, we're looking at numbers, and we're looking at numbers that are based on averages, basically, and showing us trends and momentum. But technical analysis doesn't know about PPIs, and technical analysis doesn't know about FOMC meetings. So that's where we got to get in there with our own brain and say, okay, this is coming up. Is this going to affect the position I'm in? Should I get in a position? Should I get out of a position? What am I going to do? And that's when you can go look at kind of the charts, and they kind of give you an indication. And let's go take a look at just what's happening in the S&P.
Yeah.
Right now, and I'll use the SPY because it's tradable. Okay, can you guys see that?
Yeah.
So this is the daily chart. So here was Tuesday. You can see we're trading in kind of a parallel band of the Bollinger Bands. This is an intermediate resistance level. And now you see that the 9-day has come up and hit. And for the last 2 days, we're under the 9 and under the 50. And we've been playing this game with the 50 for a while on the S&P. And now we're down below it, and you can see the 50 is acting as a resistance level also. When we go down, we can see the MACD for the SPY, which is tradable, is sliding closer to the signal line based on what you can see in the histogram. We already had a crossover stochastic. And again, I use the stochastic as an indicator of where future movement of the MACD is. And now, it doesn't always work that way, but majority of the time, from my experience, it does work that way. And then you're seeing our momentum down here. We're right at the 50 level. So medium momentum, we're still heading down. The stochastic looks like we're rolling over on the MACD. Again, these are just things that you look at. I'm like, what's happening with the SPY. It doesn't look like it really knows what it wants to do, but it looks like it's going to trend down for a bit. And again, you can come down, hit this lower Bollinger Band, and just range trade for a while on the S&P. If we go look at the Qs, if my internet's been really slow today, so I don't know what's going on. Here we go. So here's the Qs again for the last 2 days. We came down yesterday under the 50. Today we're trading above the 50, but again, here's an intermediate resistance level. You can see it's worked for a while. Got above it up to the Bollinger Band. Now we came back down again, kind of just a sideways pattern here. Looks almost the same as the S&P. We got a rolling over MACD. We've already had a crossover to stochastic, and we're sitting about 52 on the RSI. So it looks to me like we're just in a waiting game, trying to figure out what we're going to do. Now, sideways patterns are tough. When we're looking at markets, this is the NASDAQ, and we looked at the SPY. It's tough to swing trade in a sideways market because you just don't have, the direction. You want direction, upward momentum for swing trading. And so we sit and we wait. And I'll show you what we did this week. You can find some little jewels out there, but they're fewer and far in between than when we have upward momentum. And the last one, we'll look at the Dow.
Mm-hmm. What's interesting, Mark, is what's interesting is the two most traded options today are the 457 calls on the SPY and the 447 calls on the SPY and 446 puts on the SPY. So basically it creates a neutral sort of situation. So it's almost like, and it's sitting at that, right at that 50-day moving average. So in a way, it's the market saying, we don't know which way we're going to go. So, and we're at that 50 because everybody looks at the 50, it creates that neutral environment and makes it hard to like, is the market going to go up or is it going to go down?
Right. And and as a swing trader or just an investor, that's okay because you lose money when you stay in the market and the market goes down. So if the market's telling you, and through your technical analysis, that the probability of your success is to maybe be on the sideline and put your money in a T-bill for a month or some of it, then that's saving you from the potential downside. Now, of course, it can always go up, but when you look at the indicators like we have here, this isn't giving me much hope, and at least in the Dow, that we're going to go up, at least in the near term on a day-to-day basis. So again, which way are we going? You don't know, but here we are as a swing trader. Here's where you would have gotten in if you're swing trading the DIA. You would come up, come back down. Okay, you might have gotten out down here at the MACD when it gave you a signal to get out, which would have been right about this point. You'd still be out. You're underneath the 9. You still have a stochastic down. Where are we? We're about even on the MACD, and we're under the 50 on the RSI. So again, we're just sitting there, and is the probability good for a swing trade for you on this position? For me, it's not. I don't see enough momentum. I don't see enough direction, and I just see we're underneath too many of the resistance levels, and from this point of view, you're going to have a smaller amount of positions that you're in, and the ones that you are in, you're just managing and you're waiting for, a better setup. And I got some charts I'll show you of setup stocks that are setting up even in this market environment. So let's go over and we'll look at what we did. Pull this up. Oops. Okay. Let me share this screen. This is our watch list, and it was kind of boring this week. It was actually not too boring because we did pretty well considering. You can see that in August, these greens are the August that we closed out. Okay, and you can see we didn't have that many trades. We only had two bad ones in August, but August was a down month also, but we still made in August about $876 on these trades here in the green, with a couple losses. Now, again, not the best, but when you consider the market is down, it's better than it was. And you can see in these other, when markets are up, oops, sorry, we make quite a bit more. So we were down below our normal average, but again, the market's down, but we're still up. So far this month, we have yellows. Microsoft, we got in back in the end of August at about 322.98, and we actually, it went up and we sold a half a position, okay, on the 5th of September, which was Tuesday, for about a 3.32% gain after 8 days. It hit a sell limit above the resistance level, and resistance levels move from day to day and time to time because of all the averages move. So we took profit of half the position of $536 on that. We're still in half a position right now, and you can see it's gone up to 334 now. So we're up about 11.77 a share on 50 shares right now. And so it's not actually $1,100. It'd be half of this, because this is based on 100 shares, but so a little over $500 there. So that would bring us up, if we sold right now, we'd be at $1,200 for the first week of September just on Microsoft. And then we also had a position in the Snowflake a little bit. We got in at 156, got out at 158. Just kind of playing around, sideways trading. The Scholastic looked like it was rolling over. We had an RSI below. So I just pulled the trigger and took $150 on that trade. So those are the two that we had this week in a down week. Let's go take a look at Microsoft here. If I hold up, there we go. I'm moving from screen to screen here. Okay. Here's Microsoft. Here's where we put it on the watch list, and it was back here, in end of August. We put it on the watch list. I kind of put in I don't know why that happened. I don't know why that happened. Kind of hard to see. Anyway, it kind of went up. We hit a. Well, let me see if I can get a little closer on this. Boy. I don't know why it's doing it. Anyway, we went up. We took a half position off up here, and you can see it's still climbing. It's above its intermediate resistance level. It kind of wicked up a little bit of where we're going to find some sell orders, and on the top of the Bollinger Band. You could take another profit, take that profit out, which I may do, or you may let it run, because I'm still looking down here. We're still ahead on the MACD. We're having just a little bit of a crossover on the stochastic, and our momentum's still up at 57. But basically, you could take this other 50% off, take your $600, and pack it up for the weekend, and have a nice little profit of $1,100 for the week just on Microsoft and Snowflake alone. You have some sells up here, about 342.27. We're at 334. But again, it's hard to get past these resistance levels, and especially when all your moving averages are also they all converge right here. There's not much of a trading pattern when they all converge. You just kind of bounce from side to side. Again, it's a higher price stock, so this could represent $10. But in this case, I'm looking at kind of a weakening MACD. I see a stochastic rolling over. So for Microsoft, we could pull a trigger at any time and get out and take profit. Or if you think you can go up and catch some more up to 342, if we can get past that's an extra $8 on that, just based on your risk tolerance. Snowflake. I don't know why that chart did that. Snowflake was kind of interesting. It actually gapped up today, and I don't know what happened in Snowflake, but we got in and kind of got out. It was moving sideways. Some of our resistance lines moved, and where our stop limits were moved up quite a bit higher. And you can see we gapped up right to the stop limit where the stop orders are, where the gap is. It went above it, but it's still right below it. So I don't know what happened at Snowflake, but we got out and took $150 profit because we had kind of a bit of a dip in the stochastic, and I saw the RSI go down, and with the market conditions going down, and with $150 in your pocket, I'm like, okay, I'm going to get out of this one. Just happened to gapped up for some reason, and I have no clue why. But let's go over to get out of this. Let's go over to one of our lists. Let me grab it here. Horizons list. We have 2 lists besides the watch list, and this is the Horizons list. These are stocks that are not yet fully meet the 11 areas of our criteria of the swing trading plan, but they set up for potential swing trades, and these are as Monday. I go and I'll put them on Monday for the most part, and you can see how when the chart looks good on Monday, but when the market goes against you, you can see what happens. And so we try to come in with comments, and for these 2, it was basically we had a chart where we had a 1 candle close above the 200. Okay, so I was putting here we have to wait for a back test of the 200. Well, we didn't get one with everything that happened with China. Anything that had anything to do with China went down. So you can see we didn't have a back test. Price went below. We never could get an entry in this one. Here at the CTLT, we had no back test of the 200, also negative stochastic, and you can see what happened. Regency did well as Stryker. Allegiant, again, below the 50, MACD, negative scholastic, didn't work out on this list. These just basically went the other direction. They didn't go the direction where they fulfilled more of our criteria. They went the other direction. So we let them drop off, and we just work with the ones that meet our trading plan. And in this case, it's Regency and Stryker. So let's go look at Regency and Stryker. And here. And come in here and share screen. So here's where it went on the list. This white line represents that we're above the 200. You can see we had a close above the 200, and this is where we put in, okay, we're waiting for a retest of the 200. What we want to do is see this next day stay above the 200 at a closing price, and it actually did. And then you can see for the next 3 days, we've had upward patterns on Regency centers. We came up here today and we wicked up right here where the stop limits are. We've left sell orders at 64.72. Again, you use these basically if you want to sell. If you're in the position, you might put a half a position or all and get out at that point. We're also seeing a Bollinger Band coming down and meeting right where you're seeing these stops. So a lot of the traders will see that, and they'll put, that's where they put their stops. We're above the 50 for the third day. So that's good. We have a upward rising 9-day moving average. We're above the 200. We got a MACD that's still rising away from the signal line based on the histogram here. A little bit of a rollover on the stochastic, but again, when you get up into the 90s, you're going to have flat rollover kind of stochastics. And we're still up at over 60 on the RSI. So, there's some room to the upside. The support will be here at the 50. We'll have a little, at least today, this will change on Monday, but we have a little bit of a room to run up. People up here probably put in their stops and took the stops, and then that beat the price back down. but we're still doing fairly well on Regency. And then the other one was Striker. You see we have a little more weakness today on Striker, where we got in back at this point here. Again, we were way above the 200 on this one. We crossed over the 9, had a nice crossover in the MACD. We're kind of flattening out on the MACD, as you can see in the price. Came up here, we followed the upper Bollinger Band, hit some resistance there, came back down. You can see support today so far is holding at 50. We got a 9-day moving up, basically across the intermediate support level. So those are equal. So if you were in a trade like this, you might want to put some, if you want to maintain your gain, you might want to put some stop limits above or around this level here. We have a little bit up to the upside with a rising Bollinger Band. Here's our intermediate resistance level. So there's some room to run on the top. We're having a little bit of problem slowing down on the RSI. We're still above the 50. A little bit of a rollover on the stochastic. We'll see how that plays out. And then again, we're kind of flattening on the MACD. So let's see if we can stay above the 50 as support. That's a good thing. But so far with Striker, these are the two on the horizons list that actually looked fairly decent this week for us. And the under the 200 list. Let's look at that one. Again, these are high risk stocks. These are stocks that trade below the 200-day SMA. But when you get into markets where you're down, you have a lot of stocks under the 200 SMA. Doesn't mean you can't make money. It just means you need to manage these positions a lot more carefully because they're a lot more volatile. And you can see on the list here, some of these were put on, last week, and some were put on this Monday. And you can see that you have to manage these stocks within your trading plan. And again, if they don't meet the trading plan, you don't get in, and then you manage the risk on the downside and get out before we get, $7 down, like in Biogen here. So let's take a look. International flavors here, I think, is one we've been in for a little bit. See where that's headed. Oh, I didn't even put this on record. There we go. So with international flavors, we are up. I think we got in back at this level somewhere down here. This is your support level on an intermediate level. So today we're underneath the 9. Looks like we're going to close underneath the 9. We have a crossover yesterday of the stochastic. We're having less momentum. Starting to see a little roll over the MACD. Be a good time to get out of this. And in fact, I think we did say, get out of this, take your profits. I think we said it yesterday too, take your profits yesterday when we saw this crossover. So again, it made us some money. Follow your trading plans. Don't, just because it's on the list doesn't mean it's going up forever. You have to manage these, whether you get into them or not, based on your risk tolerance. But this was definitely starting to slope down and get away from us a little bit. Another one we had was Arrowhead Pharmaceuticals. And we got in back as it went above the 9 at a 1 candle close above the 9, got in back at this point. You can see now we've crossed above the 20. We're riding up on the Bollinger Band. We got a nice slope on the MACD, got a nice slope up on the stochastic. RSI's at mid 50s. So this one's been a good one going up. You've got double resistance up here on the top. You got the 50 and it's a bunch of sell orders. These are where traders have put sell orders, and you can see they put it right about at the 50. So they're using the same lines as we use for buys and sells, which is good and bad. It's good for us because, if we wanted to, we could put in a sell limit just below that and try to catch it before it comes up and pops. You can always go over that. But again, we're in this for bunts, singles, and doubles. We're not looking for home runs and just trying to make some money. on the upside, reduce our risk on the downside. Okay, what else do we got? Let's go look at just some other stocks. I'm going to look at something on our dumpster list and that I have of stocks that are I'm watching that are even turning around in this market. And here's Beam Therapeutics. And you look at Beam, it was, again, let me move this and just take a look at, it'll move, yeah. So you see Beam was going pretty much sideways for a while and then dumped. Then we went sideways for a while again, and the 9 came down, and we just played with the 9 for a while. And you can see same thing with the MACD. We kind of went slow on the MACD, and then the MACD is starting to break out really slow, and you can see the histogram is getting away from its signal line. We're still under the 200. We're under the 50. The Bollinger Bands have come down and compressed and converged. Well, they converged because the volatility was lower. Now you're probably going to see these expand out a little, but you can see how we hit the Bollinger Band here. Today, again, we're hitting that Bollinger Band. It's acting as resistance. We've got support down here at the 9 and the 20. It's just something to look at. We're still under the 200. This could go on or under the 200 list. Probably will. You still see some support, strong, upward movement on the MACD. The RSI is kind of flat around 50, so the momentum's kind of still, flat. But we need to get past this upper Bollinger Band, and then we have stop limits up here at 26.35. We're currently at 25.35, so that's $1 above. But again, these Bollinger Bands will give us areas of resistance too, which is helpful for us as traders. What else we got? Let's go one more on the dumpster list. So this is WC Energy. You can see we had a pretty good dumpster fire in the energy business here. Kind of flattened out. The 9 came down again. We really couldn't get that far above the 9. We've got sell orders right above the 20. So we got above the 9 today. So we're using 9 as support, and we went up to the 20. That's where resistance is. We're seeing a little bit of a crossover here of the MACD. We've got a nice crossover stochastic. We've got our upward rising RSI, even though it's still below the 50. So again, this is one we want to see if we can close above the 9. We like full candle closes. And then this one could possibly go under the 200 list. Again, these are where we get basically our future prospects for swing trading. And then as these start going up, they move up the list to the horizon list and then to the watch list. And then normally we see them dump off, and then we put them back. We just watch for them to come back. So this is how we do it. This is what we look for. Then we use the indicators, the oscillators, and the moving averages to help us guide where we buy, where we sell, when we stay in, when we don't. Let's see what else we got. We always look at DNA because that's kind of a club favorite here. So DNA is, and a lot of our members like to trade DNA because it gets above, here's above the 200, above the 9, they ride it up, comes back, they get out, watch it come down, ride it back up, and now you can see where we are. We now came down. Yesterday we closed just a little under the 9, and today it looks like we're going to close under the 9. You can see we're trading right up to the 9, which is now resistance, and right down to the 50, which is now support. But we're seeing a crossover of the MACD. This doesn't look good. We've already crossed over stochastic, and we're still above the 50 at this point. So there's still a little momentum. However, it's not really in the upward level of momentum. You see, we popped right up here and hit right where the sell orders were. We moved past the intermediate resistance, which we tend to do for a while, and then we come back down. So again, DNA looks like it's, for me, it's heading back down. We'll wait for the next kind of swing up. And we'll do one more for just kicks. Apple has, had issues with China this week. And you can see here's where the news came out and it gapped down. Of course, today we're up a little bit. But again, we got a stochastic that's heading in the downward trend. We've got a MACD that's slowing down and looks like a crossover, a little bit of an uptick on the RSI, even though it's like 45 because we're up a little bit today. we're down below the 9. We're down below the 50. We're just kind of hanging around this intermediate resistance line at this point. So that's Apple. That's about what I have for today. It's kind of a hard week when, we spend a lot of time on the sidelines and just try not to lose money and put it in in the treasuries and make a little money on the side. Is there anything else you guys want to look at or talk about? Well, I'm going to look at Tesla because that's Trent's favorite. Then Trent, you can tell us about Tesla. Let me put this up. There we go.
Let me get my tissues out real quick.
Okay.
Tesla's hurting.
Yeah. I've sort of backed off Tesla just because of not knowing where it's going.
Yeah, it's been sideways. Look at this.
Yeah, I kid you not. I was thinking that this week too. It's like everything is going sideways, or it drops tremendously and then creeps back up, but it seems to be sideways for a while.
I guess if I span out to a weekly point of view, it's up against, the last 2 weeks it's pushed up against that 140 what's it,
Here's your weekly.
156 range? Yeah. So it's right in this, like, it's not doing anything at this level for the last 2 weeks. And this is where I go, okay, is there, looking at the volatility of the market right now, and for instance, the VIX being so low right around 13, is the volatility going to spike? And what would cause it to spike? And if it does spike, how is it going to affect Tesla in particular, but high beta or higher volatile stock like Capsules? And I feel like right now this could go either way. I think it could go north or it could go south, but I'm looking at some of this fundamental or macro data, and I'm like, it's not really favorable at this point. And if China is really hammering on Apple, why wouldn't they hammer on everybody else, in particular Tesla? So at this point, I'm just doing nothing with it. I'm not in it. Actually, I do have an October put against it, but I'm so out of the money on it. It's like, if we got to where my strike price was, then holy cow, that would be a big payday. But I think right now, from a trading standpoint of the stock, I would just sit back and wait and just see where this is going to go, because I don't know. I'm not convinced of either way at this point.
It's interesting to me. We're about to see the 200 crossover, the death cross of the 50.
Yeah.
Right here.
Yeah.
Which is never considered a good thing.
No. And everybody looks at that.
And this is on the week. This is on the weekly. So I'm looking at your weekly chart here.
Yeah. I span out to the weekly because it's less static than a daily. So it gives me a better trend. And right now it just sort of looks to me like it's running out of energy at this point. So I'd be cautious. So yeah, but I wouldn't be surprised if we saw this get down around $200 a share at some point. But also, I wouldn't be surprised if it got to $305 a share either. So, and that's where I go.
Yeah, we're just seeing a lot of these. Everything's just kind of in a holding pattern. And again, when you're swing trading, sideways patterns, I mean, what you go into is basically range bound trading, and you just kind of bounce if you want to trade. You kind of go between the support and resistance, and you can even see. Let's even go to. Oops. Let's go over to Meta and see what Meta's doing. Look at that. I mean, same thing.
Yeah. Look at the video.
Let's go to Google. Oh, look, Google, same thing. I already had that boxed in. So, yeah, we're just kind of waiting for something to happen up or down.
And I think when you look at a pattern, that's a daily, right?
This is daily. Yeah.
Yeah. So when you look at a pattern like that, it's like a lot of times you see a more of a bullish breakout at some point. But I think in this environment, you can't really bet the farm on it. You know, you got to wait for confirmation at some level.
Yeah. You can see
Yeah.
over time, it kind of goes up, sideways, and here we went down, up, sideways, but again, it's weird with the market conditions that we have. You know, I'm just extra cautionary. I'm always cautionary anyway, but I'm extra cautionary now. You know, and again, it's just I watch, you know, I listen to the financial news gurus, and you know, everything that comes out can be explained, and it's just, you know, to me, they're just selling their own book as opposed to really telling us what's going on. And so again, that's why I rely on looking at charts and knowing what's coming ahead in our market conditions. I utilize different oscillators and resistance and support lines to help determine when to stay in or how to get out. And I limit the downside of the losses, because learning how to get out of a stock is the hardest part. I mean, getting in is the easiest part. Knowing when to get out, and then keeping your emotions out, and not minding taking a couple of % loss, because you'll make it up on the next trade. You know, is a hard thing to do.
Hey, Mark, take a look at XLE if you wouldn't mind. The energy ETF.
Which one?
XLE.
Oh, XLE. Yeah, I was looking at this earlier.
Yeah. I'm with with energy, since mid-July, I think is up at 18%, or WTI crude is up 18 or so percent since July. I'm looking at energy as, are we in a potential breakout situation and I'm looking at a weekly, but version of this, but is there a potential setup for, are we going to see this thing break higher towards $100 a share in the near future?
That's a good question. I mean, we have a nice energy, and commodities they're hard to trade, because there's someone could blow up a refinery over the weekend, and prices skyrocket, and somebody can say, I'm not going to follow OPEC, and I'm going to open my spigots over the weekend, and then markets go down. Or it's a different kind of trade. You really got to be careful. But you can look at the charts, and here at least on the weekly, we're coming up against some intermediate resistance levels, which go back all the way to January. So we'd have to get past this level for sure. You can see where the stops are. The stops are above that at 95.58, and we're at 92.39 with resistance right here at 93.15. So even on a weekly, but that the trend is up. You're seeing a nice roll up of the 9. It's following the upper Bollinger Band, expanding Bollinger Band, so we're having some volatility. We've got a nice run of the MACD. We just flattened out here because we're in the 90s. That's going to flatten out up there. And we got an RSI, getting close to what people would consider, overbought at some point. But again, it's a commodity. But yeah, it's definitely something to look at. But again, is this going to affect inflation and the CPIs and the PPIs and all that? And what does that do? I always say that the best answer to high inflation is high prices, because if the prices get high, no one buys it anymore, and then it goes back to supply and demand, and the price goes down.
I guess the question is what is that high price point? And
That's a good question.
you know, at what point do you see gasoline prices? For me, you mentioned earlier, it's up every week. Same here. I fill up, once every week and a half or so. And I've gone from low 40s to fill up my car to now mid 50s. I'm like, I don't want to drive anywhere, after $60, So I wonder what that looks like for everybody else as well.
Well, I think it's the same. I know you're not having to drive to work every day like some people, but if you had a commute, and I used to commute an hour each way, so that's an extra 40 hours of driving a month. And when you're filling up every day instead of, every week, that affects people.
Yeah. Yeah. And that's where I look at this. I think it was what's the Saudis said something about easing back on oil production or kind of thing. I just saw a glimpse of something about a week ago on it. I'm like, well, that would definitely drive $100 barrel. That would drive prices higher for sure.
Yep.
And it's in a way, their way of squeezing us.
Yep.
Yeah. Interesting.
Well, it's 12:30. Does anyone have anything else? Margaret or Jason or Kerry? Anything?
Nothing off the top of my head. Appreciate you guys.
Yeah, thanks for showing up. Always appreciate you guys.